YouTube, what's up everyone? Welcome back to the show. Exchange data just leaked, supply, it's evaporating. And the biggest macro shift of the decade, it's starting right now. If you missed what I'm about to show you, you're gonna look back at 2025 and say, that was the moment. Everything changed and I slept on it. Let's break this open because the charts, the Fed, and on-chain data are screaming one thing: a supply shock is incoming. We're going to start right here. Let's get into the first, a major signal the market is ignoring. And honestly, this is where the entire domino chains begins. So here's what just dropped. The Fed, they are preparing for a hawkish cut. Yeah, not a cut with fireworks, not a cut with victory laps, a cut wrapped in a warning label. Wisdom Tree's chief economist, Jeremy Siegel, one of the most accurate macro callers alive, he just said he expects a 25-point rate cut, but with extremely restrictive guidance. Interesting, right? Let me translate that into crypto language for y'all. Rates go down, liquidity drip finally begins. Hawkish tone, we're cutting, but don't get excited. Markets, they get excited right away. But here's what's actually matters. The first cut is the end of a tightening cycle. That's the moment the tide turns. Liquidity always moves before the commentary, and traders who wait for clear signals, they always end up buying the top of the next leg. Let's listen to this quick clip here from CNBC.
It's ahead of this week's Fed meeting. This right now is Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business, also, of course, Chief Economist at Wisdom Tree. Good morning to you. What do you think we are going to hear from the Fed this week? And what do you think we should hear from them?
I think we're going to hear what I call a hawkish cut. I think they are cutting 25 basis points. I think there's going to be dissents on both sides. I think Mirren is going to go again for 50. But I think there could be two, maybe even three that want to keep it unchanged. So
it's ahead of this Fed
there
meeting.
You go.
So right now is Siegel, Professor Emeritus of Finance.
What should we expect? Volatility, absolutely. Midterm, insane. This setup is getting wild, folks. This is the part where the smart money starts front running the invertible, right? Every time this setup happens, risk assets rips. That's a lot of rips. I'm a rip. 6 to 12 months later, bottom line, the Fed is cutting even if they pretend that they don't want markets to celebrate, but they can't stop what this means for crypto. And speaking of an unstoppable moment, let's roll into the next macro bombshell. You better buckle up for this one because this is one of the most bullish demand boosting catalysts I've seen in years, and I've been here for 8 years. Treasury Secretary Scott Bessent, he just confirmed the $100 to $150 billion in tax refunds that is coming next year. Let me say that again. 100 to 150 billion in tax refunds coming next year. This is the largest refund in US history. I mean, we're talking about an extra $1,000 to $2,000 per household. That's not a small bump. That is an economic shotgun blast. And Scott, he didn't stop there. No, he sure didn't. He said the bond market just had its biggest year since 2020. Interest rates down, mortgage rates down, housing, it's waking back up. Rent dropping 5% soon, maybe 10 to 15% for all my renters. Inflation, it's cooling faster than most people actually realize. Gas prices, nationally, we are now under $3. Even under $2 in some states. That would be nice seeing a $2 gas price, right? But look, bottom line, this is the exact recipe for a demand explosion. When households get breathing room, crypto benefits first because it's the easiest bet on the board. It really is. Let's listen to this.
President Trump has closed the border. 2 million people have gone home, so check on immigration. Bond market had the best year it's had since 2020. Interest rates are down, mortgage rates are down. We're starting to see life in the housing market, and rental rates are down about 5%. I expect they'll be down 10 or 15 from the peak. And then 3, inflation, we're working on that. The energy prices are down. Gasoline nationally is now below $3 a gallon. It's below $2 in a couple of states. So I think we're on a very good track on inflation. And I'm also the IRS commissioner as well as the Treasury Secretary. And I can see that the president's signature initiatives in the One Big Beautiful Bill, and I tell you, he fought harder than anyone for these. No tax on tips, no tax on the overtime, no tax on Social Security, auto deductibility. That the bill was passed in July. Working Americans didn't change their withholding, so they're going to be getting very large refunds in the first quarter. So I think we're going to
very large refunds. I hope I don't get a strike for just beat it. And look, with the IRS commissioner himself saying the president is pushing, or he pushed very hard for tax-free tips, tax-free overtime, tax-free Social Security, and automatic deductions. Guys, this is not soft landing energy. This is freaking rocket fuel energy. This is how you prime a supply shock. And let's move over to this because Reese Merrick, he was on CNBC today. This is interesting. And by the way, if you're watching this and you want personal guidance here, if you want someone in your corner helping you navigate these crazy macro waves in real time, check out the one-on-one calls. The link is down below. And make sure you sign up for that free newsletter. And then we got this, Reese Merrick on CNBC. He said, we just secured full regulatory approval in Abu Dhabi for RLUSD, Ripple's USD stablecoin. Do you know how big that is? Abu Dhabi isn't just a regional hub. It is becoming the Wall Street of digital assets. And Ripple, they didn't stop there. Multiple acquisitions, scaling its global operations, permissioned regulatory framework, institutions love that, stablecoin expansion, and massive liquidity channels. Ripple's leadership said it perfectly. Regulations and transparency, that is what creates trust. Trust is what institutions need to enter digital assets. This is your institutional runway. This is exactly what Ripple is engineering. A bridge for traditional finance to plug directly into crypto rails. We got the full interview here. It's about 6 minutes. We're not going to play it. We'll retweet it. So go check out our timeline if you want to see it. And then Gemini, my favorite. Here's where it gets a little spicy. And I like spice, folks. So Gemini is adding support for RLUSD on the XRP ledger now. Remember, when Gemini first launched RLUSD, it was the Ethereum sidechain version. Looks like Gemini and the Winklevoss twins, they're really coming around. I told you good things was coming out of Gemini now, didn't I? Instant settlement, ultra low fees, institutional grade rails. This is Gemini. Stable coins, that's your backbone of crypto trading. Payments, remittances, on-chain commerce, everything, you name it. And by running RLUSD on Gemini now, on the XRP ledger, Gemini is basically saying, hey institutions, look at us. Our plumbing's ready. Are you? And guess what happens next? If you guessed ETFs, you guessed right. 21 shares, they are preparing. That launch is coming. Remember, we covered this over at XRPrightnow.com and we broke down 3 possible timeframes for you. If you didn't check out the article, go give it a read. It's a beautiful article, I promise you. It's either going to happen second half of this month or in the beginning of January, or if something crazy happens February, it's going to be either this month or January. It would be smart to do it after the holiday if you ask me, but hey, what do I know? So this is the press release. Let's listen to it. We know it's not a rumor. We know it's coming. This is the weaponization of institutional demand, folks.
Today's big development in the ETF arena, 21 Shares is gearing up to launch its long-awaited XRP ETF, trading under the ticker TOXR. In its latest SEC filing, the issuer slashed management fees from 0.50% down to 0.30%, positioning TOXR competitively as it prepares for CBOE listing. This comes as spot XRP ETFs collectively approach $1 billion AUM, with rivals like Bitwise, Franklin Templeton, and Grayscale offering aggressive fee waivers to attract inflows. The filing marks the 5th amendment to 21 Shares S1 registration, signaling the issuer is making final adjustments while awaiting the next regulatory step. The trust will track the CME CF XRP dollar reference rate, with custody handled by Coinbase Custody, Anchorage Digital Bank, and BitGo Trust. Meanwhile, BNY Mellon is set to manage cash custody, administration, and transfer agent duties. Despite the momentum, XRP's price is hovering around $2.05 ahead of the FOMC meeting.
I don't know if that's an AI or what, but you know what? Good information. ETFs do one thing extremely well, and I think we all know this. They funnel billions into a capped supply asset. And we already seen what this did to Bitcoin and what it did to Ethereum and what it is now doing to Solana. Now imagine the same structure hitting an asset where supply on exchanges is collapsing, which brings us over to this. Wisdom Tree preparing its next index fund. And guess what? XRP has a large chunk of it, about a fifth, 19%, folks. 19. That's not a small allocation. That is conviction. Wisdom Tree knows what the institutions want, and they are giving it to them. When these products go live, XRP becomes a top tier asset with automatic inflows. Institutions, remember, they don't DCA emotionally, they do it mathematically, which brings us to the meat and potatoes of this video. This is the part that everyone is sleeping on. I'm going to blow this up for you. In just 1 month, yes, you heard that correctly, 1 month, XRP reserves on exchanges have collapsed from 7 billion to 5.7 billion. That is over 1.32 billion XRP vanished, gone from the supply that was available out there. This is exactly what happens before a supply shock. Coin leaves the exchange, wallets accumulate, price drifts sideways, people lose hope, and then suddenly it doesn't anymore. This is the same pattern we saw before previous XRP expansions and before Bitcoin's last major run up. And when supply drains, price doesn't ask for permission. It doesn't say, excuse me, do I have permission to run now? It just goes, everyone. It just takes off. And then to cap it off, in Ripple, I was gonna say in Ripple iTrust, but if Ripple's trust bank gets its final approval, it becomes a regulated, federally regulated digital asset institution. Now I want you to say that 3 times fast. Think about that. Ripple would be able to custody, manage, and distribute digital assets under full federal oversight. That's not just bullish, that is historic. This would cement XRP as one of the most institutional ready digital assets on planet Earth. So just zoom out for a second with me, folks. We have a Fed pivot disguised as a warning, the largest tax refund cycle in history, Ripple's gaining global regulatory clearance, RLUSD is now powering Gemini on the XRP ledger, Wisdom Tree, heavy weighted index fund. We have the 21 shares ETF on deck under ticker TOXR. Your exchange supply is collapsing, and a federally regulated Ripple Trust Bank about to open its floodgates. All of this is happening at once. This is what a supply shortage looks like before the charts actually show it. This is the part of the movie where most people aren't paying attention and later pretended they always knew. If you're still here, folks, you're early, you're informed, and you are positioned for what could be one of the biggest moments in XRP history. Hit that thumbs up for me. On the way out, I'm gonna see all y'all